Hi, this is Zam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 22nd of March, and it looks like it's party time for the FTSE. We've broken through the top of that rising August trend channel from last year, 78.50, and above that looking for around the 80.25 level, which is a late May 2023 resistance line projection. Hopefully that could be over the next few days, maybe even by the end of this month. On the bigger picture, we've got a rising trend channel there from around 2006. And the top of that channel heading towards the 8,500 level. Hopefully that could be hit sometime in the next quarter for the FTSE, but obviously given that we've been stuck in the upper 7,000s for over 20 years, getting too excited at this stage may be an error, but obviously we do have the interest rate cycle potentially working in our favour. On the downside, below 78.50, then there's a risk of having to test 77.90 again, which was the initial March resistance. Moving on to the DAX, and here the story one of further progress. We were looking for initially 17,900, which became a new support, and above 17,900 looking for the top of that October rising trend channel. That's currently heading towards 18,700, and we're looking for that by the end of next month. Worst on the downside at this point, hopefully no lower than the current March support, 17,600. The Dow is next, and here you can see that we're rapidly approaching one of our resistance line targets there. That's a September resistance line projection. That's currently heading towards 40,400, so looking for that over the next couple of weeks. Best case by the end of next month up to 41,200, which is the top of that very steep rising trend channel from the beginning of October. Ideally, now we stay on the right side of 39,300, which was February and March initial resistance. Bitcoin is next, and here some of the dust has settled after the rug pull that we had over the last week. What's interesting here is it looks like there's just quite a hard right shoulder there, 68,500. Need to get an end of day close above that and then give us a retest of the best levels or record levels that we've had around 73,000 and head up to as high as 80,000 by the end of next month. On the downside, really don't want to see 60,000 broken, because that might mean we have to have a test of the 50-day line, currently at 57,600. On to gold, where the chart's a bit out of date because there's been a fall since, but hopefully still 2150 will come in as support again for this market. We obviously went rather near to our 2260 target there, the July resistance line projection. Still looking for that by the end of next month while we're above 2150. Moving on to the stocks, and one of the more strong fundamental situations of the recent past, Cornerstone, company which transformed itself, and here you can see the unfold gap to the upside through a rising 50-day line that started the rally back in December. Just the period since the end of January been a consolidation phase, but ideally or hopefully the low is in on the latest move around 26 pence, and above that looking for the top of that rising trend channel from back in August as high as 44 pence. Maybe over the next 6 to 8 weeks, so maybe even as soon as the end of April. Moving on to Finu, which has actually delivered the goods in terms of recovery, which seemed somewhat unlikely. Here you can see we've got a rising trend channel base, and we've made a good progress here up towards the top of that rising trend channel there at 1.4 pence, looking for that over the next few days. If you're a fan of the shares and looking for greater glory, then I suppose the big prize here would be to head up towards the 200-day line of 1.8 pence by the end of next month, which at the moment looks quite achievable. I think we're all remembering that the company does actually have some cash, so it is open to things happening, nice things happening, presumably. Moving on to Cadence, which had a decent update again. The company bolstering its Mapper asset. Here we've had another bounce off the 50-day moving average at 5.1 pence, so let's call it, and looking for a retest of March resistance around 6.75 pence, hopefully over the next couple of weeks. The other point to note is it's a bear trap gap reversal, which tends to be one of our stronger signals, and does suggest that we've got a real chance of retesting that 8 pence, 8.25 pence area post-September resistance on the daily chart. But all the while we want to stay on the right side of 5 pence. One of the best gainers of the recent past has been GCM Resources, and the good thing here that the shares managed to maintain most of the gains they made, hitting that first resistance line projection around 9.25 pence. We're still looking for up to 11 pence by the end of next month, while we remain above recent 6.75 support. On to a stock which somebody's requested on Twitter, and here got Genincode, and the situation here is that obviously the fundamentals are kicked in, and we've had a nice spike to the upside through the 50-day line there at 4.1 pence. The longer we stay above that, the greater the chance of a move to the top of that broadening triangle base from back in December at 8 pence, and that could happen by the end of next month, but the key here really staying on the right side of 4 pence. So relatively simple charting situation. If you were looking at the shares over the recent past, you could have seen that there was an uptrend line in the RSI window, so that was telling us that there could be a turnaround coming, but obviously the exact timing there, really the break of that resistance line there around 3.8 pence, which happened intraday yesterday. Moving along to a situation which has been a slow burn over the recent past. Intercede, here you can see that we've had a gap through the rising 50-day moving average. We've been looking for the shares to hit that £1.30 resistance line projection. That's from back some while ago now, back in 2021. And the view now is that the longer we stay above the recent uptrend line around £1, the greater the chance of £1.30 plus by the end of next month. Onto IMC, one of this week's other big winners, and here the shares actually doing rather well in the sense that we had the gap up through the 50-day moving average, found support above it as well, and that's around the 1.7 pence level, the 50-day line above 1.7. Looking for the shares to head as high as 4 pence by the end of next month, backed by that unfilled gap to the upside. Moving along to stock which has been rather more in the wars, and that is Myriad Advertising. Here you can see, though, that we've got this rising trend channel base. We had a bear trap gap reversal, and we held the top of the gap just about at the beginning of the month, and we pushed through the gap higher day at 1.7, above 1.7 and the 50-day line, looking for Myriad to head up to as high as 3 pence by the end of next month. So looking good there. Petrad is next, and here the shares sort of bumping along the that resistance line target that we had from August last year, so around 4.4 pence. End of day or end of week close above that, we're looking for 6.5 or 6.7 pence by the end of next month. The other point to note is that the 50 and 200-day lines starting to rise, so we could be due a golden cross, and we've had consolidation above at least the rising 50-day line in the recent past. So this looks like quite a high conviction situation, and also we've had a double bounce at RSI 50 at the beginning of the month, so hopefully Petro will break out nicely. Bolt from the blue in terms of the rebound at Symphony Environmental, which is good to see. So it's a bear trap gap reversal from below the February support there, 2.75 pence above 2.75. Looking for at least a retest of the January resistance around 7.3 pence, ideally up to 8 pence. Maybe by the end of April, but obviously that is quite a punchy call. The key here, though, is to stay above the 2.75 pence level. We did actually also have bullish divergence there for eagle-eyed investors. Moving on to S4 Capital, where it's not been a happy situation over much of the recent past, but you can see there is basically a broadening triangle base there heading for 63 pence. We had the spike there through 55, we're way back down now, but if we do stay above the 50-day line at 40 pence, there is a chance of a revisit, or at least a partial revisit, of the best levels of today in the mid-50s. On to the last two. First one is XL Media, which I saw somebody gushing about on Twitter today. Here you can see that we managed to push through the resistance there from back around 12 pence back in the late summer. And the longer we stay above that, the greater the chance of a follow-on move here for the shares. That could take the shares at least up towards the old resistance on the way down, February 23, which was at 18. So basically the message here above 12. Got a best case scenario target there at 18 pence on XL Media. The other positive point to note is both the 50 and 200-day lines are now rising, so that means that we're probably 2 or 3 weeks away or less from a golden cross buy signal. The run up to golden cross tends to be the strongest part of the cycle, but the shares are already telling you that. Finishing on with Zephyr, which has improved very well of late. We had the V-shaped bull flag breakout through 3.1 pence, which was talked about here. We've also got the shares hitting our initial target there, the red line, 3 3/4 pence. Above 3 3/4, looking for 5 pence, which is the upper parallel of that broadening triangle from September, a June resistance line, and hopefully we'll hit that well before the end of the next month. The other point is to wait for the 200-day line to start rising, because that would suggest we are on a golden cross here, and there could be a decent move, retracing some of the damage that we've seen over the recent past, especially the H1 of 2023. That's it for me today. More updates over the weekend.